Crypto or stocks, which is better for building long-term wealth? This question is more relevant now than ever before. With markets shifting, economies evolving, and technology changing how we invest, it's important to understand what you're putting your money into. In this video, we'll break it all down in plain language. We'll look at how stocks and crypto work, compare their risks and returns, and help you figure out what makes the most sense for you. Let's begin with stocks. When you buy a stock, you're not just trading numbers, you're buying ownership in a real, operating business. For example, if you buy shares of Apple, you own a piece of that company. If Apple sells more iPhones, earns more profits, and grows its business, your share becomes more valuable. That's how stock investing works. You're placing a bet not on hype but on real-world performance, innovation, and value creation. Stocks are also well established. They've been around for over a century and are regulated by financial authorities like the SEC. This provides investors with a sense of safety and transparency. You can track company earnings, read financial reports, and see exactly what you're buying. You can invest in individual stocks like Tesla or Microsoft or in index funds or ETFs. These let you own small pieces of many companies at once. For example, the S&P 500 index fund lets you invest in the top 500 companies in the United States. Now let's shift gears to cryptocurrency. Crypto is digital money powered by blockchain technology, a secure decentralized system that doesn't rely on banks or governments. The most popular cryptocurrencies are Bitcoin and Ethereum, but there are thousands more. When you buy crypto, you're investing in a technology-based asset, not a company. Some cryptos like Bitcoin are designed to be digital stores of value. Others like Ethereum are platforms where developers can build smart contracts, decentralized apps, and even entire digital economies. Crypto is borderless. Anyone with an internet connection can participate. That's a big reason why people in countries with unstable currencies turn to crypto. It gives them financial access and freedom. But, and this is a big but, crypto is still in its early stages. It's highly speculative, less regulated, and extremely volatile. Some people have made millions overnight. Others have lost everything just as fast. Now let's talk about returns. Crypto has delivered incredible returns, especially for early adopters. Imagine buying Bitcoin when it was just $1. Today, even with ups and downs, it's worth thousands of times more. Many altcoins have also exploded in value, though often followed by major crashes. Stocks, on the other hand, grow more steadily. Over the last 100 years, the stock market has averaged about 8 to 10% annual returns, factoring in reinvested dividends and inflation. While not as flashy as crypto, those returns have made millions of people wealthy, slowly and steadily. So what's better? If you want fast potential gains and are comfortable with high risk, crypto might catch your eye. But if you prefer reliable compound growth over time, stocks have proven themselves over and over again. Now let's talk about risk. Crypto is famously volatile. A single tweet or regulation can cause a 30% price swing. Hackers, scams, failed projects, these risks are real. Even storing your crypto wrong, like losing your wallet password, can result in a total loss. Stocks are not risk-free either. Companies can go bankrupt. Markets can crash. But stocks are usually more stable, and recovery is historically much faster. Plus, investors have tools like diversification, dividends, and dollar-cost averaging to help manage risk. The key takeaway here is that stocks have historical trust and legal protection. Crypto is still the Wild West. Let's talk about accessibility. Investing in stocks has never been easier. Platforms like Robinhood, Fidelity, or Charles Schwab let you start investing with just a few dollars. You can set up automated investments, track your portfolio, and buy fractional shares of big companies. Crypto is also very accessible. Apps like Coinbase, Binance, or Kraken let you buy crypto 24/7 anywhere in the world. No banks, no middlemen. Just you and your wallet. But there's a learning curve. Understanding how wallets work, protecting your seed phrase, navigating fees, and avoiding scam coins, all of this takes time and education. Let's compare safety and regulation. Stocks are protected by strong laws. If a company lies or misleads investors, they can be fined or shut down. Your brokerage is also usually insured in case something goes wrong. Crypto not so much. Many crypto platforms are unregulated. If they disappear or get hacked, there's no official backup plan. That's why many crypto experts recommend moving your assets to a private wallet. In short, stocks are safer for beginners, while crypto requires more self-responsibility. Now let's talk about use cases. Stocks represent real-world companies producing real goods and services: phones, software, groceries, cars. As these businesses grow, your investment grows. Crypto is more experimental. Some coins are used for transferring money faster or cheaper. Others power online games or DeFi protocols, which let people borrow, lend, or earn yield without a bank. Crypto could be the foundation of the future internet, Web3. But that future is still being built, and it's not guaranteed. Here's the big question: which one is better for building wealth? The truth is, you don't have to choose just one. Many smart investors use both. They build a strong foundation with stocks and index funds, something stable, proven, and growth-focused. Then they add a smaller percentage, say 5 to 10%, into crypto, as a high-risk, high-reward play. That way, they benefit from both worlds, reliability and innovation. Your choice depends on your goals and risk tolerance. If you want to retire in 30 years, stocks might be your best bet. If you're young, curious, and willing to take risks, crypto might offer explosive upside. And if you want balance, diversify into both. Just remember, always do your own research. Never invest money you can't afford to lose. And think long term. So what do you think? Are you team stocks or team crypto, or both? Let us know in the comments below. If this video helped you, give it a thumbs up and subscribe for more clear, no hype financial content. Thanks for watching, and remember, building wealth isn't about luck. It's about smart decisions over time.